Well, welcome everybody. My name is Tony Margiotta and I'm the GM here at Rise in London. And as always, before we start, I'd just like to say thank you to everyone who's attending and to all our illustrious speakers. So we've got a cracking panel today. This is our Rise Presents session, and the topic, of course, is from financial inclusion to inclusive finance. What is Rise? Very quickly, Rise, created by Barclays, is a global community of the world's top innovators working together to create what we believe is the future of financial services. Our mission is to connect technology, talent, and trends from the Rise network to accelerate innovation and growth in the financial industry. We have two locations here in London, and we've got a fantastic club in NYC in New York, and both teams speak every day, so it's great. And a combined community, I don't know, around just 100 companies, fintech companies. But it's all about today. And today, as I said, we've got a fantastic panel headed up by Andrea Mario Constantino, who is the moderator. He's from Lycus Ventures. And the rest of you just bear with me on some of the pronunciations. We also have Sam Abrika, who is the CEO and co-founder at Nova Money. We have the notorious Chris Skinner, author, speaker, and the bit I love, troublemaker, who's here. We have Vivek Maglani, CEO, founder at Multiply, who were members here at Rise, and we still keep connected to them guys. Julio Rindi, who's the CFO Latin America for Mastercard. Welcome. Maximilian Rofaga, CEO of Finamize. And we were going to have Carice Gray from Barclays, but she had to, unfortunately, cancel at the last minute. Not before, though. She managed to get a very cool stand-in from Barclays with Stuart Sliper, Head of Money Management, Insights and Coaching. Welcome all, and I'd love now to hand you over to Andrea.
Thank you very much for the introduction, Tony, and thank you to all the panelists to join this meeting today. As the title suggests, what we want to do today here is to discuss a topic. It's an open conversation. Of course, there will be some guidelines and themes and questions that we'll try to answer with our amazing guests. But ideally, what we would like to crack on with is why we should talk about financial inclusion and inclusive finance, or why we shouldn't focus just on financial inclusion, which is a major challenge these days, but also look at it from a different perspective, which is inclusive finance. And to do this, we have a very good, again, as Tony mentioned, a very good panel. We have the entrepreneurs, right? So we have Max, Sam, Vivek, who run companies that are involved on a daily basis on this kind of topics. And we also have the institutional leaders, the thought leaders, Stuart in this case, Chris and Julio. I will start maybe giving like 5 to 3 minutes each to you guys, so you can maybe explain, why you've been chosen and what you guys do on a daily basis, and then we'll give a bit more background to the attendees to understand what we want to discuss here. Who feels like wants to start?
Let's start with you, Chris.
Oh, sorry. I didn't catch. So, hi, I'm Chris Skinner, who, Tony, you called me Notorious. Some other people call me much worse names. And yeah, I do liberally call myself a troublemaker because I tend to point my finger around the industry at the parts that most people don't want to talk about because they're embarrassed by it. Particularly the legacy systems and legacy structures and legacy products of the traditional financial firms. I write a blog every day at thefinancer.com, and it literally is every single day and has been for over 13 years, which has resulted in 19 books, of which a few are behind me, Digital Human, Doing Digital, most recent. And part of the reason I've been called here, I guess, is because I spend all my time researching and observing what's going on in the industry and outside the industry and bring finance and technology together, which makes me known as a fintech guy. But finance and technology have always been together. It's just that they are now moving into a much more open banking structure, which changes things. But equally, within the fintech community, there's much more focus on doing very specialized capabilities that traditionally financial institutions couldn't do, which does include financial inclusion. So in Digital Human, a third of the book is dedicated to a case study on Ant Financial, which is now Ant Group, the sister company of Alibaba in China, that's all about financial inclusion. And equally, inclusive finance is about reaching the parts that traditional financial firms couldn't reach until we had open platforms and the internet, such as providing financial literacy and financial wellness. And one of the things I love today is the innovations around creating connectivity with people who maybe find money stressful because they've never been educated in money, or people who have illnesses, particularly the elderly, where they can no longer monitor their money, or they might get subjected to scams, and they can connect through apps to their kids and their grandchildren if they have them, so that they can monitor their accounts for unusual activity. And the world is changing very quickly in that, one of my favorite examples is the way in which India changed in the last decade from having something like 65% of citizens unbanked in 2010 to having only 15% of citizens unbanked by 2018. And that's because they've really used the capabilities of technology to revolutionize the country. So we'll probably touch on all those themes as we go through this panel discussion. But basically, I'm someone who speaks my mind and say it as I see it.
Excellent. Thanks very much, Chris. Hey, Sam. How about Sam from Nova Money?
Hey, everybody. My name is Sam. I'm the co-founder and CEO of Nova Money, which is an AI financial planner which helps people plan their long-term goal and what they really want in life, and then track their spending. And when they track their spending, then they can see the impact of their daily behaviors on their long-term effect. And what we want to do is help people realize that actually a lot of their behaviors and their daily spending, they don't really originate from them. They just buy what others people want, because we have so much advertising, and everybody believes that their role in life is to buy stuff. And instead, we want to empower people to focus on what they really want. And for a lot of people, they want, for example, to buy a house, to pay off the debt, to be financially free. And if they really want something and can focus on it and can adjust their daily behaviors, then there's a plan for that. And that's why I created Nova Money. So we just launched this year, and we were number 1 on Product Hunt, so we're very happy about it. And now preparing, hopefully, our US launch.
Nice. Excellent. Thank you very much. Vivek from Multiply.
So, hey, everyone. Yeah, I'm the CEO of Multiply, and we at Multiply help people achieve their goals, hopes, and aspirations. We have an app which provides advice across people's savings, investments, pension, life insurance, basically holistically. And we combine that advice with the infrastructure to implement those recommendations. And really our vision for the future is what we call autonomous finance, where people will have money moved to the right products, the right time, the right amounts, such that they closely align with what they would achieve in the future. My background is very much in the finance industry. Spent 13 years in finance, mostly as a derivatives trader. In my last 2 years was very close to the world of financial advice. Saw firsthand the impact it could have on people, particularly the kind of emotional impact beyond the kind of financial, economic impact. But also saw that the service was very much restricted to those who could afford it, and kind of democratizing that service and increasing and basically making it more inclusive was very much a driving force behind what we did in terms of automating it and providing access to as many as we can. Where we are today is that we're very much focused on two primary goals. The first is helping people buy their first home, and the other is helping people build their wealth.
Excellent. Thanks very much. Julio from Mastercard.
Hey, good morning, good afternoon, everyone. And thanks, Tony and Andrea, for the kind invitation. My name is Giulio, 20 years in international finance roles across the globe. I lived in 3 continents. I worked for audit consulting companies first, then I moved to heavy industrial organization like Pirelli, then moved on to American Express in the global business travel services industry, and then the FX kind of sector. And then 9 years ago, I joined MasterCard, which took me in a round the world trip. I spent the last 6 years in emerging markets, and I think I'm here because the 6 years really opened my eyes on the opportunity of financial inclusion that we have in front of us. So I will be happy to share some of my learnings and findings during my journey.
Thanks very much. Max, Findermite?
Yes, hi. Can you hear me all right?
Perfect.
Cool. I have to check. I just had to set up a better microphone. So my name is Max. I'm the founder of Findermite. We are ultimately trying to build a modern financial information platform and community. So in essence, what we do is we have 2 things, or really 2 pillars. We have content that we produce in-house. We have a team of analysts who used to work at Goldman Sachs, at Fidelity, etc. People who really know what they're talking about, and they try and share all of the insights that they get from all day thinking and reading and speaking to other research analysts, and condense it down into key insights that they can then share with the modern retail investor in 15 minutes a day. It's available through newsletter, through mobile apps, available in text and audio. And then we have a really, really active community. Last year, more than 30,000 people connected via meetups that we host all over the world, that are hosted completely by our own members on a voluntary basis. And that made us the largest financial gathering in the world by quite some distance. And this year we're on track to connecting 60,000 people. And really where we see ourselves sort of in the overall ecosystem is specifically in the retail investment space, where there's been a lot of innovation on the infrastructure side. And there's a lot of talk around democratization of financial markets, which I think the infrastructure is part of it. And what it's done is it's reduced the barriers to entry, fractional shares, zero commission, all of that stuff. And that's opened the gate, and more retail investors are coming into the market. Last year alone, 10 million retail investors entered the market in the US alone. This year, Charles Schwab announced in Q1 that they had more retail investors open accounts than all of 2020. So it's an accelerating growth there. And what we see is that there's a really, really big vacuum in the market where the modern retail investor doesn't have access to quality investing information or investing insights. The existing solutions are very, very expensive. And often very, very convoluted and complex to wrap your head around. And so that's why I think we're seeing people turn to these free platforms like pseudo finance gurus on TikTok. I'm sure we have all heard of them. People who just got a stimulus check and are now trying to tell you what the next altcoin is. Obviously, the rise of Reddit, and I think there's amazing stuff on Reddit, but there's also a lot of noise out there. And what we really see our role in this ecosystem is to provide an affordable solution to the modern retail investor who is time poor, who's community driven, and who also wants to learn by doing. And that's the vacuum that we're trying to plug and help fill, and thereby fully actually democratize financial markets as part of the ecosystem.
Thanks, Max. That's great. And Stuart, Barclays.
Trying to come off mute there. So, yeah, hello all, and thanks for having me here today. So, a quick bit about me. I've worked in the banking sector for the past 11 years, and I'd say that I've spent my time attempting to use technology to help people bank better so they can live better. everywhere from my very first job, where I was part of a team in South Africa focused on entry-level and inclusive banking, which aimed to improve access to financial services for lower-income customers, to later running digital banking in Barclays, Uganda, back in 2012 and 2013, where I was able to observe the absolute explosion of mobile banking led by mobile network operators in East Africa. I've also been fortunate enough to work in premier banking in Botswana and later digital banking in the UK. I now spend my time working in a team that tries to help customers manage their money better. And just something that I've observed in my travels is that there's value in places that I call the Goldilocks places. And these, I think, are the places where there are real problems and the resources to address real problems. By resources, I mean capital and humans. And so often there's one or the other. So a place with all the knowledge and capital, but very few problems, because the problems have been solved mostly, even if suboptimally, by yesterday's technology. Or a place with lots of problems, but not much capital and few highly skilled technologists to attempt to solve the problems. So I've got a personal interest in finding these sort of Goldilocks places where both capital, knowledge, and problems coexist as just really interesting case study places. So it's great to be here. Thanks.
Awesome, Stuart. Thank you. And finally, let me hand over to the moderator, Andrea. It's all yours, and a little bit about you again.
Thank you very much. Right. So if we start from my introduction, right, and then we heard from all the panelists, we understand that there is a very wide background here in terms of finance, but also like social impact. Now, as you heard from most of them, we talk a lot about financial inclusion, and this is one of the major challenges. Let's say fintech is an industry that has been growing a lot in the last years, and of course now it's focusing on more specific issues and problems. Now, of course, we have plenty of fintech solutions out there, right? They're scalable. They go and capture a lot of demand. However, we still have the case for unbanked and underbanked people in the world. Now, and we will get into the topic a bit more with Chris in a moment. But let me just outline what it is that we're trying to bring on the table today. The idea is very simple. The fact that and I'll make a comparison with a quite known brand, Ferrari, right? The top car, everyone wants a Ferrari. A lot of people want a Ferrari. Maybe not everyone, someone, a McLaren, but it's taste, guys. And the fact that we are in a society where we could potentially, let's say, give a Ferrari to everyone, it doesn't mean that give a Ferrari to everyone, it is the right thing to do, especially if people don't have a driving license. It will just create a bigger mess out of what actually exists. And I think this is the starting point. And I will call in on the virtual stage on my virtual stool close to me, Chris, to briefly discuss what is financial inclusion and what would be, as you mentioned at the beginning, the role of financial education as well. Because of course, as far as we know it, financial inclusion means making financial products and services accessible for everyone, right? But also we need to think about the deep meaning of inclusive. That meaning including many different types of people, for example, which have to be treated fairly and equally. So my question to you, Chris, is do you think there is this alignment today in the industry, or do you feel there is such gap? And I think, even Max suggested something about information. So maybe we want to start from there.
Yeah, I mean, let me start with the easy bit, which is financial inclusion. And I say that's the easy bit because we have seen, thanks to the mobile telephone, so many people in so many countries now having access to financial services that they never had before. And 10 years ago and today, it's the poorest people in the world that pay the most to transact with traders and finance because they typically have to do it physically with cash. And if they try and do it electronically because they don't have an account, they pay a huge proportion of the transaction as a fee to the account transactor. And that's something that's radically changed. Now you can pretty much move money via apps without bank accounts in real time, globally. And some of that's driven by things that are happening with cryptocurrencies. And so by way of example, the most popular usage as a application of blockchain and Bitcoin is in the migrant remittance worker space, because it's immediate and costs very little by comparison with traditional remittance providers. But that brings me to the second area, which is financial literacy and inclusive finance and financial education. Because what we've also seen, and I'm reflecting on this a lot over the last year during lockdown, is huge amounts of money moving into Bitcoin and also all the other cryptocurrencies, and equally into silly areas like Doggy Coin or Dogecoin, depending on how you want to call it, as well as into stupid stocks like GameStop and BlackBerry. Why is that happening? You know, CNN the other day had a headline, which is a small trader in New Jersey who provides a cafe that's transacted $35,000 over the last 2 years is now valued at over several $100 million as a stock. This is to do with people illustrating what's called the extraordinary madness of crowds, and equally bucking the system because they don't like the system. And it's going to be interesting to see the carnage that comes out of this, because my personal view is we will see a massive implosion of the madness of crowds in cryptocurrencies and stupid stocks, and a lot of young people losing a lot of money because they're not educated in trade and investments in the way in which the old markets are. And yes, I'm an old guy, so I'm bound to say it that way. And yeah, I'm happy that they try and buck the system. I just think that by bucking the system, they'll lose their bucks.
Fair enough. That's a very good point. And I think on this one, I will just mention, the definition of underbanked, which are those who struggle with like access and services. And one of the main challenges of these people is not really having access or not to financial services. Could be a transactional account or any other service. You mentioned remittance, but it is very much understanding these products, right? Understanding how they work, what is their impact. And that's one side of it. And then, as you, Chris, mentioned, there is the retail investor side of things. And I think on this one, I will call into the conversation Max as well, because what looks like to me, of course, is information and, plays an important role. Information, education. A lot of people educate themselves, not maybe following courses, but just reading through the news, right? So in 2021, we are bombarded by news every day. And the thing is, on one hand, it's very good because everyone has access to knowledge. But on the other hand, it can be really bad because people can get access to wrong knowledge, to wrong information, and as Chris mentioned, make things worse. So what do you think information stands these days, Max? How do you think we could make it better in a way that people can screen better information and have access to what is relevant and what is correct?
Well, I guess the short answer is they sign up for Finimize, but I don't think that's what you're looking for. No, I think so. First of all, I think that's sort of the everlasting debate is, is what's happening out there bad or good? And I guess at the end of the day, who are we to judge? I think I would sort of caveat what was just said a little bit. I think the research that we've done in our own community and also the research that we've seen from other people do is, a lot of these new investors are not kids. I think the average age of these I quoted like 10 million retail investors in the US last year alone. I think the average age is somewhere like 35 or above. We always hear about these 20-year-olds who put all of their savings into a GME, but I think those are outliers, at least from the data that I've seen. And then I think the thing is that there's a bit of a shift in paradigms, I think, between sort of the older generation of investors and the modern, quote unquote, modern generation of investors. And what I mean by that is like, what we see a lot in our own community is people learn by doing. And so because of fractional shares and because of also crypto, but like all of these things that have been happening, they learn by doing, by putting, when people put money into an altcoin, or when people put money into Tesla or GME or any of these hype stocks, yes, there are people who put all of their money in there, and you read their stories on Reddit and you think it's completely insane. But the majority of the people that we at least speak to, they put like £100 in there. And they're not being stupid about it, as I think often the media portrays it. They're not sort of idiots who just plow everything into an altcoin. They invest tiny amounts because that gives them the feeling that they have some skin in the game, and that will actually help them learn. So it's this, like, we describe this as like the casual investor. So and the casual investor only has like 15 minutes a day from what we've seen, and they learn by doing. And I think that then, to come to your question, that's really what I think today's sort of information society really needs to consider, is building an information service that is for this modern investor who's time poor, who learns by doing, and who cares about the community.
That's very good, and that's more, at least from my point of view, the corporate, like corporation. You have a company, you look after financial information from a business perspective, right? I'll call in Chris again, and I'm asking, from your point of view, Chris, being more of a thought leader, being an influencer, a writer, like, how do you make sure, or how can we make sure that there is the right flow of information also from relevant people like you, for example, right? They have a voice in the industry and they don't mislead, or maybe what they write, what they share is not misinterpreted by people who don't have enough knowledge to make their own evaluation.
Yeah, I mean, I'll also pick up on Max's points, and I wasn't saying that it's kids in terms of 20-year-olds, because I'm an old man. I call millennials kids, so probably call you a kid. So what I was really getting at is how, yes, people learn from doing, and they educate themselves by testing. But I've got people every day in my network saying, should I invest in Bitcoin? Should I buy Ether? Should I go and get some Dogecoin? And my answer is, you can do that if you want, but it's absolutely quite ridiculous, because you don't know the assets or the valuations or the details that go behind these currencies. And I personally do believe that there is a strong future for some of them. But today there's 2,500 cryptocurrencies out there. And equally, there's a lot of betting on stocks that are completely worthless as fractional shares. And a part of it is backing the system because you're trying to push back on the short sellers. But what I really think we should be doing is investing people in not value investing, which is the Warren Buffett way of the world, but in much more in how to actually manage money, the basics of managing money, not speculating or doing casino gambling. Just in the last few days, Elon Musk has just come out and said, I don't believe in Bitcoin because it's burning the planet's energy. And the price went down 20% in 12 hours. That is not a stable structure for financial services. And I think we just need to have far more inclusive finance education, so people know much more about, if they're going to play about with these things, it is play versus where they should put their real money.
Very good. Exactly. Very good. So that makes me think that is, of course, as we mentioned, more of a social problem, right? And other than the information services, industry influencers, of course, we have major institutions. We have here two representatives, Julian Stewart, and maybe I'll call you guys on my virtual stools if you guys want to come and sit close to me. And I think my question to you is very much, from an institutional point of view, right? What we discussed so far, what do you see in the industry from your experience? But also, how do you think your institutions or institutions in general are tackling this kind of issue? Because it sounds to me, we know there is so much going on also from a regulatory perspective, both in the securities market, but also crypto space. There is an MICA regulation coming up in 2024. Hopefully, there is going to regulate a bit more crypto derivatives. So without even getting too complicated, right? But in general, how do you see the institutional players try and facing the financial inclusion issues, and which kind of solutions is in the market?
You want
Okay,
me to
happy
start,
to.
Andrea?
Yeah, Julian Stewart. Yeah.
Cool. Go for
Sure.
it, Julia.
Thank you, Stuart. So financial inclusion today is very much into the DNA and the narrative of big organizations, including Mastercard. How I try to dissect the value chain on financial inclusion is a little bit as follows. First, I think about the infrastructure, and I think Max mentioned that at the beginning. Infrastructure that big technology players put on the table around the card network, ACH, blockchain, open banking. Then I think about distribution of this platform, and fintech here for me play a huge role in distribution of financial services and financial products. And then we go into the adoption of those services, which then led to financial education. So I'll try to kind of dissect into 4 buckets. And financial education is a fascinating topic for me personally. I think there is a huge amount of work to be done across the globe. But let me share with you a little bit my experience. I worked in the Middle East and Africa, and now in Latin America in the last 6 years in emerging markets. And what we are seeing, for example, in Latin America is something incredible. We have unbanked and underbanked population. 45% of the population is unbanked or underbanked. Only 19% of the population has access to credit. But we have a fertile ground for financial inclusion. We have a friendly regulatory environment. We have a young population. Millennials will be 75% of the workforce by 2025, and these are digitally native guys and girls. We have a good connection. Cash usage, as some of you were mentioning, is still very, very high. And there's been a huge amount of investments into fintechs that are kind of facilitating the infrastructure, distribution, and adoption kind of exercise. There are some names that maybe are not well known by some people in the audience in Latin America, from Mercado Libre, who is the Amazon of Latin America, which is a huge player, listed company, which really created something amazing. We have Nubank in Brazil, which went from a garage idea to a 40 million customer, providing credit to unbanked, underserved, and today one of the biggest financial players in Brazil. A huge success story. We have Voila in Argentina, that started as a small prepaid issuers to provide a simple prepaid card for people in Argentina just to access Uber, Netflix, and basic services. Now they have 3-4 million customers. They are challenging the traditional banks, and they are a fantastic distribution kind of channel. What are these guys doing? They created a simple value proposition. They were able to go to market efficiently, and now they're building on this base of customers to provide other services, insurance, savings accounts, and that goes along with the whole financial education discussion that we're having. If I step back for a moment and I think about, to your question, Andrea, about what Mastercard, for example, is doing, financial inclusion is part of the narrative constantly. It's part of the DNA. We have been in the business of inclusion for years. And our goal is to bring a social impact at scale. We have publicly committed to kind of some financial inclusion goals, bringing 1 billion people into the digital economy by 2025. We committed 250 million to SMEs to bring them into the digital world. We are partnering with more than 100 governments across the globe for digital disbursement. And we launch initiatives more in the financial education space, kind of called, like the one called the Girls for Tech, where we bring technologists and STEM kind of practices into schools across the globe, which is really a fantastic program. I really would like you to kind of explore that a little bit if you have some time, some spare time, because it's incredible. So, I to conclude, I think that it's a combination of digital inclusion and financial inclusion. I think that the aim of this big corporation in general should really be to drive more access to the internet, to lower the cost of tech, to address the lack of digital skills, on top of the financial inclusion aspect that we are discussing here today.
And MasterCard has always been a company, involved both in proper fintech, because involved in technology, but in financial services. So you had this kind of exposure. I think from the other perspective, it's interesting to hear from you, Stuart, like, what about a bank? Because banks, of course, they're becoming more and more technology companies these days. Lloyd Blankfein from Goldman Sachs said some time ago, we're a technology company, we're not a bank. That's how he would define it. So my question is, how are you guys doing? How are you tackling this at Barclays? Or anyway, what is your personal experience in the industry from the banking side of things?
Yeah. Okay. So firstly, I really liked Julio's point around inclusion being built into the DNA and narrative of large institutions. And to build on it, I'd also say that inclusion means different things in different markets. So the drivers for unbanked and underbanking are different in different markets. Income is sort of consistent as a driver, but there's also things such as age, too young, too old to be adequately served by the existing products that are offered. Maybe your income's inconsistent. Maybe there are processes which exclude people who don't, for example, hold required documentation. I remember when I first moved here, I needed a bank account in order to start renting and a proof of residence to get a bank account. And you can't get your proof of residence until you start renting. So I was stuck in this sort of circular reference. To speak for a moment just more specifically about what Barclays offers. So we, as much as Andrea, you say that we have this sort of notion that we're now a tech company, some of our solutions are very low tech as well, intentionally. So some of the things that we offer is money mentors, so free and impartial help available to customers and non-customers on topics ranging from the basics of budgeting to the complexities of buying your first home. But encourage everyone on the call, if you're in the UK, go check out Barclays Money Mentors. If you have anything that we could maybe help you with. And next up, so Life Skills is our flagship education program with a focus on helping young people gain skills and knowledge to improve their employability, preparing a good CV, etc. As having an inclusion aspect, with people who land jobs and are able to progress themselves are also more likely to become financially included. So just taking the Barclays hat off for a second, though, speaking about a few more general observations, if I may. In my observation, it's not about the technology, it's about people and understanding what financial needs they have and how it's currently being met. Only then, once you understand how they're currently meeting these needs, can you then ask, well, is there a way for technology to do this better? Secondly, the topic of this discussion is phrased in a really interesting way, from financial inclusion to inclusive finance. And to my mind, this is all about building financial products and services that are inclusive for everyone by design from the very beginning, rather than trying to augment what you built yesterday in an attempt to make it work for a customer base that it was not initially designed to work for. So this whole notion of inclusion by default, not by exception. And just when and maybe Julia, you've had similar experience in the developing markets, but the importance of the profit motive. So when your access to the financial system is dependent on a continued charity of someone else, then you're in a pretty precarious situation indeed. Building inclusive products by design for the whole market, rather than trying to fit your existing product to work for a base that it wasn't intended to, building for the whole all at once means that it forces you to retain the profit motive in your mind, because you can't afford to lose money on 100% of your customer base. Yeah, I'll stop there and hand it back to you, Andrea.
Thank you. No, very, very insightful. And I think, I will pick up on your contribution, guys. And I'll try to play the devil's advocate here. I've been working with startups quite a lot, also with big corporations in different industries. Something that we always kind of hear is that big corporations are really slow to adapt. They're slow to innovate. They're slow to do everything because of their size, right? We've seen this in banking. We've seen this, with fintech, especially again, a lot of leaner players getting into the market, being able to innovate and change something that at the end of the day wasn't rocket science really, but the execution and the time to market made the whole difference. And now on this one, I will call Sam and Vivek, so to understand how you guys from the fintech space and, the fancy entrepreneurship points of view, you guys feel this problem is being tackled. And again, like, especially you are in first line every day. So what do you see happening in the industry from your perspective, and what the challenges in your opinion are to actually reach out to these people and make sure that everyone is up to speed with financial literacy and knowledge, thus inclusion?
Yeah, sure. I don't mind going first on this. So first of all, I'd say that I think startups are going to be really key to kind of bridging gaps that are out there when it comes to inclusion. I think, just by virtue of being able to focus on narrower markets, move at speed, take on risks that bigger incumbents don't really want to kind of focus on. I think there's kind of very interesting entry points and opportunities for startups to focus on. And I guess the kind of very straightforward answer to kind of how startups can help with inclusion are to essentially include either through products or services those who are excluded. I think a number of people have said that there's that inclusivity means different things in different markets, and you see different startups doing different things in different markets. I think broadly, the way we look at things, the kind of financial landscape, is that we see there's almost like a whole world of manufacturing financial products. Whether it be a bank account, whether it be a mortgage product, a loan, whatever it may be, where there's a huge amount of innovation taking place. And there's different layers of that, right? There are startups who are providing basic building blocks of infrastructure that then other companies which make the lives of other companies a lot easier. Whether it be processing payments or KYC or money transfer or whatever it may be. And then I think there's a whole other kind of area of innovation and really impact when it comes to inclusivity, which is all to do, I think Julia was talking about this earlier, around distribution. How can you essentially be really effective at getting the right products into the right into customers' hands at the right time and the right amounts? How do you match all of that up? How do you provide that intelligence, or almost like operating system? Where historically, if you talk about what we're doing here at Multiply, historically, this used to be done either through speaking to friends and family, reading blogs or newspapers, or speaking to a financial advisor. I think there's so much scope there now for technology to kind of get involved and almost be that operating system, that intelligence layer at mass market, such that the default for people's finances aren't what they've been to date, which is generally pretty bad and suboptimal. The default setting for people's finances can be very good. I think there's going to be a really, really critical, critical place for startups to play. And just linked to that, there's also like a really strong element of technology playing its role. A number of people earlier on talked about the internet, mobile phones being enablers. Going into the future, AI, crypto will be really big enablers as well. But kind of really leveraging that, being like doing a really good job of your personal finances isn't just kind of look at it one day and just like put it all in order and that's it for the next 30 years. It takes interventions almost every month to kind of do a really good job. And once you kind of set up a system, essentially a broad system for doing your finances really well, that's where technology, that's where a great app or whatever it may be that's linked to all this fantastic infrastructure can really play a role in kind of helping people and include them in, I guess, the world of doing your finances well, of doing a really good job. That's kind of my thinking around that.
Fair enough. And you, Sam, what is your take on this one?
The biggest problem I see in financial inclusion is the knowledge gap between those who have the financial education of how the system works and those who don't. We live in a society where, especially in the UK, more than half of the country has less than £100 lifetime savings. Most people are very stressed about their financial situation on a daily basis. Most of them couldn't afford to have just an increase of £100 expenses and pay their bills. And what was the most striking to me is, although I studied master's degree, engineering, I did MBA, I was never taught how to think about money. And it's only when I worked in investment banking that I realized how the system works. And the most striking is the banks and the rich people, when you look at how they get rich, and then when you compare it to the rest of the population, they actually do the exact opposite things. They use different financial product and they make different decisions. Most people consider that money is something to be spent, and that's mostly the dominant narrative. So they default to everything that I earn, I'm going to spend it. What actually they don't realize is most people who get rich and have money working for them is because money makes money, and actually it makes money very quickly. And when you know that actually the money that you save can build your financial freedom, can make you safer for the future, then it completely changes how you see your money and how you see your finances. So what we're trying to do is to show to people that they don't need to be to accept this way of living of trying to spend every single pound that they earn because that's what they default to. And actually, there's a path to financial freedom. They can get more confidence with their money. They don't have to be living paycheck to paycheck, and actually, they would feel much better because when people default just to spend everything that they earn, and they miss out all of the power of money, which is to make more money. And I think that anyone, if they really want to be sustainable and have a healthy lifestyle, can be financially free of debt, free of money worries, and build a system that is working for them in the long term.
And I'll pick on this one, right? I think what I heard so far, it's all it's all great and kind of goes along with what we're trying to express and solve for here. But that's exactly where then my flip side comes in, and I'll pick a very specific example. So there is a sub-industry of fintech that is exploding, that's been exploding, especially in the last month, which is the buy now, pay later solution, right? And that's where it gets tricky, because that's exactly, I think, the perfect example of the Ferrari that I was giving at the beginning. So we have a tool, and I tested myself. Okay, I just bought something online, some proteins or something like that, and I came across on the website, and it was offering the buy now and then you pay later. So I was like, okay, let's try it. And it was so easy that it was actually scary how easy it was for me to just get straight, pay, and not paying, and then just get some net. Now, this was for a very small amount of money, right? But in a world, as you described, Sam, in a world where most of the people, they either, unbanked or underbanked, or they're anyway under a kind of living wage situation, how do then we make sure that these services like buy now, pay later are not a curse rather than a bless? So what do you think, Sam?
That's a very good question.
Yeah.
So in the investment banking, there was a very big wave of regulations by the regulators, ESMA, etc., that was obliging banks to make sure that their customers understand the product. And it was particularly relevant when they were selling complicated structured products to pension fund managers, etc., that it was actually so hard to understand what's behind. And what we don't tell to people is spending can become an addiction.
Absolutely, but this is exactly, in fact,
and when you buy a pack of cigarette or when you buy alcohol, it's kind of clear you need to show your license, you need to be adult, etc. Smoking kills, and you see like some horrific pictures of lung cancers and blah blah blah. But when financial products to buy stuff with money that you don't have, like Klarna and others, are sold to people, they're just sold as very glamorous. Get what you want right now, and it gives the impression to people that it's fine to buy stuff with money that you don't have. Like there's no repercussion, and so 90% of the buy now pay later is not used to pay groceries. 90% is to buy fashion. And fashion in the lockdown, well, you can hardly argue that it was the basic necessity. So it's mostly used for people to get some dopamine rush. That's what most shopping is, dopamine rush and retail therapy. And the problem is most people who use that, they don't necessarily understand the long-term impacts. They don't understand interest rate, compounded interest rate, and how it plays in their future. What they see is, oh, great, I can buy this, it's so easy, it's less friction. But there's always a downside when you remove friction. You remove the friction from buying, well, you also remove the need of thinking, oh, do I need that? Will that make me happy? Will that make me happy right now or even for the future me?
Fair enough. I would like to open it a bit to the panel on this one. If there is any one of you guys that wants to add something, because I feel, given the level of knowledge that we have here, I'm sure you all have your idea around this buy now pay later service, which kind of resembles the credit cards business, really. So I don't know if Giulio wants, being on the space, wants to comment on that, or anyone else, whoever feels wants to add anything. Don't be shy.
Well, I'll weigh in as no one else is, in that I think buy now, pay later is being hyped as something bad, and what's the difference between it and the credit card industry? The main difference is the risk assessment, but Klarna works on a risk assessment based on data analytics. And although it's got some bad reputation, I think it's actually been hyped out of proportion. And equally, I've known Klarna since they started, so I think they're quite a responsible company, and they're not as irresponsible as are being made out in the media. And equally, as I listen to the conversation so far, one of the interesting things to me is meeting Henry Ma, who's the CIO of WeBank in China. He's very proud of the fact that they can administer a bank account for 47 cents a year, less than half the US dollar. And he does that based on what he calls the ABCD of technologies: artificial intelligence, blockchain distributed ledger, cloud, and data analytics. And those technologies are combining to make banking, basic banking in particular, cheap and easy for everybody. So I think as Max mentioned earlier, or maybe Sam, that it's expensive to run a bank account. It's not expensive, except the onboarding process. And what's interesting from that perspective is we've seen N26 get their knuckles rapped from BaFin, the German regulator, for not adhering to client onboarding regulations after 2 years of being warned that that's an issue. And at the moment, I'm seeing Monzo closing down many of their client accounts because they haven't done the due diligence of client onboarding. And it's that part of getting the client on board that's been the expensive barrier to banking. But I'll come back to buy now, pay later, because I think that industry will flourish and form into something that could actually be an alternative to credit cards over time. But they need to do it in a way that's far more responsible than it's been done today, because, as mentioned, it makes it far too easy to spend money you don't have. Having said that, as I say, if you've got the data analytics, which Klarna does have, then it's not irresponsible.
Yeah, just maybe adding a couple of reflection on this super fascinating topic. As a finance professional, I think cash flow management is fundamental, not only because it's day in, day out what I do, but I'm sure all of you founders and kind of professionals, I think education around cash flow management is really the name of the game when we talk about payment solutions. I think I really like the concept that Sam was elaborating around nurturing your savings, right? So learn to save first, teach key concept about compounded interest, the fact that you can really have zero cost saving accounts that give you something instead of keeping cash under the mattress. Today you can invest through ETF, so really low cost ability to access the stock market without going into the fashionable and more risky stuff that we were discussing before. So I think that on this nurturing your savings kind of concept, there is a lot to do, a lot to learn, and it's a huge opportunity.
Thank you, Giulio. I know we're kind of overrunning a bit. I also think that, being very interested in the topic, I would like to just touch on one last final point and challenge all of you here. I kind of have a guess who's gonna take it first, but we will see. So we think about solutions, how to reach a very large amount of people that can't access financial product, don't have access to from a retail perspective, even payment systems, right? In regions where probably infrastructure is something that came up as well earlier during the panel, is not very well developed. Now, as you all know, tokenization, cryptos, digital money, Bank of England being one of many banks that are exploring, the CBDC, central bank digital money, digital currencies, and many others all around the world. So if we think about fractional shares, fractional investment, the access that everyone has through digital products, my question is, how do you think can cryptos, digital money, tokens play a role in the financial inclusion? So, for example, if you think of a society or a region where in order to give access to people, we give them access to tokens, but they only earn tokens based on the financial knowledge that they have, for example, right? If they take courses, if they score a certain amount of points by learning, and so on and so forth. So where do you see, if you see them at all, fitting digital money and cryptos in this type of ecosystem? And I think maybe Chris, you want to start on this one.
I'm always happy to start. So the question you're really asking is Britcoin or Bitcoin, because a central bank digital currency or any corporate currencies will be permissioned and centralized, probably using Ethereum smart contracts or something that develops and evolves from the Ethereum platform over the next decade, versus democratized, decentralized, and distributed currencies based on something like Bitcoin, which will solve its energy issues over time. And the real thing around this is, what is it that you value and trust? Now, I've grown up in a state system with borders where I believe in governments. But I think that is shifting in that I've said for a long time, in a global network that doesn't recognize nation states and borders, you need a global currency, but you can't have currencies without government. So it's the government thing that's the interesting friction right now in terms of, do you need a permissioned network run by a central bank or a permissionless network run, or a permissionless currency run by the network? And that's what this moment of time is where we're going through. It's very likely that by the 2030s, just like if you think about the 1990s, there will be some very strong new structures of exchanging value, some of which will be nation state operated, maybe on Ethereum and permissioned, but there will definitely be at least one currency that will be run on as a global currency for the network. How and who runs that currency is the question.
Very good point. Someone, okay, it was just my voice. Very good point. And I think this is the challenge, right? Understanding how to develop, how to make sure that there is something that is going to be also acceptable, because we've seen one of the main challenges of Bitcoin at the beginning and all the other cryptos is exactly this lack of something that we're very used to, being the government or the middleman or any kind of institution that kind of serves for the purpose of regulating. I don't know if anyone else in the panel feels like adding anything on this bit or something that you have seen in your space, maybe the institutional space.
No, I mean, I think I would add just very briefly that I think, although I'm not a crypto expert by sort of, or like a fanatic, like there are people out there, I think there's a lot of really interesting use cases that could evolve. For example, if you think about tokenized stocks, would not only allow sort of 24/7 access to them, but would also broaden the access when it comes to perhaps people in developing countries getting access to stocks in New York, for example, at a price much lower than they would normally pay. And so I think there's, and not even to speak of any kind of like government regulations that might hinder them. And so I think there's a lot of really interesting opportunity. The question obviously will be how these use cases will be shaped, etc. But the opportunity is there. And I think a lot of these things currently are very much in this like toy phase, where they look like toys, but the technology, it looks very promising, and the toy has the potential to turn into really, really powerful technology. And so that will be, from my point of view, the key question: will it make that transition, or will it remain a toy?
Nice, thank you. Anyone else that feels like want to add anything? Short, shoot again.
Yeah. So again, quick disclaimer: I am not a blockchain or Bitcoin expert, but I think to Max's point, there are a few interesting use cases that I can sort of foresee. One that would really help is around identity. How do we help people prove who they are to third parties, so that we can help to, among other things, reduce the cost of onboarding, as you mentioned earlier. Another one is around the reduction of friction for large transactions, such as I have recently sold my apartment in Johannesburg, and took weeks to get to the deeds office. Can't help but thinking that there's probably a use case there for blockchain to help speed up the transfer of assets, such as immovable property.
Nice. Right. So this kind of takes us to the end of this panel. I think it was very interesting to hear from all of you the different experiences, but also the different points of view on the topic. I do believe we could spend other probably 2 hours digging deeper and deeper into the topic, into the experiences. What I feel like is more like as a conclusion of this is there is very much going on. Institutions, startups, entrepreneurs, thought leaders, like there is a wide and clear understanding of what the challenge is. and what the challenges will be going forward. For sure, it's something that needs a lot of work. There is a lot of need for education and, like kind of teach people and go to the right places and look for the right audience and bring the right message to the right audience. So there is a lot of also like behavioral training that has to be done, right, in terms of spending, investing, and managing their money. It's definitely a lively environment. It's definitely a lively space. I do personally believe, which is why my interest got moved into this specific topic. There is so much that is going on already, also in different forms, and a lot of other things will come up, and it's definitely a space to watch. Now, I want to thank everyone, all the panelists. Your insights were amazing, and I think for everyone that followed from beginning to end, I'm sure they'll leave today with something more and something that they learned. But before we head away, we leave space to a small Q&A session. So everyone is free to unmute and just ask right away, because I cannot see the chat function either. So I think that's the only way you can get into the conversation. So if there is anyone that feels like wants us to discuss something a bit more, or there is a doubt out of our conversation, please ask right away. And don't be shy. You can keep your cam closed so we don't know who it is. I would just, No one? So I assume it was crystal clear.
Okay, I think that's great. I think there's a lot of information to consume, a lot of wisdom. I know that everyone who's joined from the Eventbrite, you can see all the speakers and their LinkedIn contacts, which is brilliant. I just want to say, Andrea, thank you so much for bringing up the idea and putting these amazing speakers together. It's just an absolute pleasure to listen to really interesting people from all different sectors and also in different parts of fintech. This is what we do, and it's been thoroughly enjoyable. For anyone out there that wants to get in touch with us, just go to rise.barclays. That's where our website is about what we do here at Rise, and we have these sessions all the time. But I leave the final word to you, Andrea. Thank you.
Thank you very much, Tony. Again, very excited. I think it was really interesting. I'm happy you recorded this, because I'm going to be very, very much looking forward to sharing with my network. It's definitely an open conversation. So as Tony mentioned, feel free to get in touch with all of us and, ask right away if you have any doubt or if there is any idea that you think might be relevant to the topic.
Excellent. Thank you all very, very much, and have a fantastic weekend.
Thank you.
Thank you, guys.
Thank you.
Thank you. Bye.